Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from the wealthyhomeowner.ca, Canada's authority on home ownership. Welcome back to the show, Ross.
And thanks for having me back, Jim.
Ross, yesterday we heard that condo investors were taking on cash flow negative homes on the promise of making gains on house price alone. Do you see that as a factor in the housing market right now?
Well, it's not a factor in the housing market. I mean, it is also another one of those clickbait headlines where a bank economist is making broad statements, painting people with broad brushes, that is really insulting to the intelligence of the average Canadian family. Look, Jim, this is how we see it. Zero house price gain investing is the foundation of all real estate investing. It's the foundation that home ownership itself is built on. If you can't justify financially buying a real estate investment based on zero house price growth, you should not buy it. You should not buy it. Ideally, zero house price gain investing allows inflation to maintain the value of the property from when you purchased it. But there is still zero house price gain required outside of inflation. Now, we say inflation because, I mean, you can't put up a piece of drywall 10 years from now for the same price you can put the drywall up for today. That's just the way inflation works. But any good, sound real estate investment strategy in the residential space, so I'm not talking about commercial, I'm not talking about industrial, I'm not talking about multi-family, large apartment buildings. I am talking about regular mom and pop investing in real estate, one house at a time, one household at a time, one housing unit at a time. Your investment should always be based on zero house price gain. Now, here's the problem. The economist who was making those comments in the charts and going on how stupid people were, or that their expectations on house price gains were the reason that they were buying it, may have been true. I can't say whether it's not whether it's true or not, but I can say it's also a false narrative. If I gave you $100, Jim, today, and I promised to give you back $1,000 at the end of the month, meaning you made a net profit of $900, would you do it? Would you do it? And I'm assuming the answer would be yes. I'm going to give you $100, or you're going to give me $100, and at the end of the month I'll give you $1,000, so you made $900 profit. The cash flow narrative on investment real estate died when interest rates reached 9.83%. And the entire structure of a rental real estate deal should have changed at that time. This bank economist who is criticizing people for spending $100 a month cash flow negative condos is clueless. They're putting $1,000 a month into their pocket and they're pulling $100 back out. they still put $900 in their pocket. That's what, you see, I'm not measuring cash flow the way he measures cash flow. I'm not measuring cash flow so that it's spendable cash. I'm looking at the flow of cash into my bank account. When the flow of cash into my bank account is 9-to-1, I don't care if I spend the 1 because I'm getting the 9 back. I give you 100, you give me 1,000, I have a $900 profit that month on that $100. My equity position in the property is a totally different story. Am I leveraged on a 5%, 10%, 20, 25% down? My personal opinion is you should have a 25% down, zero house price gain investing strategy in 2021. In 2022, that will probably still be the same. 2023 it'll be the same, probably 2024. And maybe somewhere in the future you're going to have to start adjusting that. You're going to have to start looking at things differently. But isn't that what you do with your investing portfolio? You look at it differently. Look, when you enter a real estate investment, you have to assume there is a 15% premium that you're paying on that investment versus a stock or another asset. When you're buying real estate, you have to build in the cost to divest of that real estate on a moment's notice. That means you have to build in your real estate fees. You have to build in 3 months of carrying an empty home. You have to build in lawyers' fees, mortgage discharge fees. You have to build all those in. Now, the 15% is at the acquisition price. That is the risk that you assume. Now, if you put 25% down, that means you should be left with a 10% risk exposure. That's it. Now, if you're giving $100 each month, but your condo, even if it's not going up a penny, is giving you back $1,000 in return, you are $900 wealthier at the end of the month. If you don't understand how interest rates impact the cost of a home or the profit of your investment in real estate, then you shouldn't be investing. What I see from these type of reports, Jim, is this. I see the same thing that I've watched happen for the last 30 years. The moment the housing market is turning, the bank economists all start seeking a scapegoat. They start seeking places where they can say, oh, well, we weren't wrong because of this. Oh, our forecasts were wrong because of this. Oh, you remember when 6 months ago we were telling you it was going to be low interest rates forever, trying to get you to take the biggest mortgage possible? Oh, we didn't know about this. This is what's going on again right now. Today we saw a report come out from BMO. The BMO report was stating that, what did it say, the BMO report? I can't even remember off the top of my mind. You have to understand, Jim, we see a dozen fake housing reports every single day. And this is what our reality is. I don't have the BMO one in front of me today. Maybe it'll pop in my mind later. Anyways, it was another false report. Data debunks it. So, cash flow negative real estate investments can make you wealthy without the house price having to increase a penny. If you don't have a spreadsheet that shows you how that works, don't invest in real estate. Don't believe a bank economist who has been wrong about the housing market for decades. Don't believe a housing economist who believes that the Toronto Real Estate Board produces the Toronto house price. Don't believe them. Don't believe an economist who doesn't even understand how an amortization table works in terms of making you wealthier every single month. Don't listen to them.
More with Ross K. right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross K. Ross, the last couple of weeks we've been inundated by house price gain claims and a new attack on the tax-free wealth gains made by homeowners, in other words, capital gains tax. How do you see this attack on the wealth that Canadians have built up in their home?
When you have been force-fed, Jim, false narratives for decades, and you believe what all of these fake experts say, you're seeing the natural consequence. As I'm talking to you here now, I've gone to Evan Siddell's Twitter account, the CMHC, or the CEO for CMHC, the man who single-handedly has insulted Canadians now for the last 6 years, the man who single-handedly instituted policies that naturally caused the average price to increase without telling the public that that was going to be a consequence of his policies. This is what I see. First of all, I see that cash flow negative chart retweeted. So I have the leader of CMHC retweeting a fake condo investing chart as a support for his own incompetency. I then see this statement. To those blaming CMHC for the impact of mortgage insurance on the housing market, the law says we must offer. Oh, it's not our fault. It's the laws. We don't make the laws, he says. We have done more in the last few years to reduce this support more than ever before by raising premiums. You stupid first-time home buyers. We just burned you over the coals, and we're proud of it. And we've lowered our market share with tighter underwriting. We have constrained those who cannot afford, those who can buy a house under a set of terms that have never existed since CMHC has existed. We have made it so difficult for the lowest quality of home buyer to buy a house, the type of home buyer who for generations got their first step in the market under those underwriting terms. We have removed you from the market. This is all in one tweet, Jim. He brags about asking first-time young Canadian families to overpay a premium by the billions and billions and billions of dollars, which he then turns over to the Canadian government to blow on whatever idea that they want to come up with. Maybe they're going to use that money to support a minimum wage family and give them enough child tax care credit so that they can own a home for free. I don't know. I'm just saying this is what he's bragging about. Who in their right mind, when they have virtually no defaults on the insurance that they've been providing for the last 10 years, brags about raising premiums? The level of arrogance, Jim, is outstanding. He then falsely blames lower market share as a result. Let's see. The average price increased at a historic level since you tightened underwriting. Okay, so you cut out the lowest priced buyers from the market. In each category of trade-up buyer, you twiddle down the least qualified to trade up in each price category, and then you wonder why house prices jumped, because you're measuring with the average price by the members of the Canadian Real Estate Association. Yes, 100% of the blame for house prices to where they are today, for the inequality that exists between homeowners and renters, the amount of housing bubble that exists in Canada today is 100% to blame on CMHC, Mr. Siddell, and their staff's refusal to demand proof when the Canadian Real Estate Association claims house prices went up in Vancouver or Toronto when they didn't. That's where the blame is. Then he goes on, there's an article in the Post on the 20th. Booming housing market lifts Canadians' confidence to a new record. If our economic confidence is based on a booming housing market, we've lost the plot of this country. Increasing inequality, owners versus renters, built on flimsy economic growth from trading houses, driving cars longer distances, and increased debt is not a recipe for econ prosperity. This is his entire tweet, Jim. Think of the amount of falsehoods in that tweet. A booming housing market, not home trading market, housing market, is the greatest way to stimulate growth, reduce inequality, and make long-term economic fundamentals of this country get better. Just the opposite of what he's saying. He believes that we should push Canadians into smaller and smaller homes on smaller and smaller balconies. Now, can you imagine, Jim, the pollution, the greenhouse gas emissions that are forced upon the owner of a condo versus what a single detached homeowner with a backyard is able to do? A single detached homeowner with a backyard, technically speaking, can have a septic bed, eliminating all of the demands in the municipality for the water treatment system. They could have a well, for the sake of the argument, and they would be responsible for their own well water. They can have electrical solar energy via solar panels on the roof of their house, or a geothermal unit installed in their backyard, making them net zero energy consumers. Net zero in terms of greenhouse gas emissions. They can choose to power their car electrically. Again, not causing any pollution. These are options that you will never have in someplace with a balcony. You are always going to be relying upon others to reduce your impact, your negative impact in the world. This is what he's promoting. And he's calling this economic prosperity. Look, folks, Canadian home ownership wealth is now, the way that they measure it, at almost $7 trillion. That means for the 70% of Canadian households who own a house, that 70% of the Canadian public is the wealthiest that it's ever been. Now, the other 30%, CMHC has did nothing to help them afford to buy a house. They have did nothing to put more backyards in this country, to demand policymakers put more backyards in this country, so people who now live with a balcony can move into a house with a backyard. Zero. Just the opposite is taking place. When we talk about taxing capital gains, this is my perspective. If you want to tax a house with capital gains, then you give it the full capital gains treatment. You give it the full capital gains treatment. just like you do for any other asset. Because I'll tell you, Jim, I will sit down with 94, 95% of Canadian homeowners and show them how they would be further ahead if the government treated as a full-scale capital gains taxation. That means you get to write off all of the interest that you paid on your house for the last 40 years, if you're a 40-year homeowner. That means you get to write off all of the improvements you've done to the house. That means you get to write off all of the maintenance you've done to the house. That means you also have to take into account inflation. So if your home has increased because the value of the dollar has decreased, you can't be penalized that with capital gains. The reason why these stupid capital gains discussions happen is because you have decades and decades and decades of fake housing market analysis, fake homeownership wealth measurements. It's the same reason why financial advisors are left out in the cold, unable to approach homeowners and get them to approach their home equity the same way that they do with every other asset that they have. You must diversify your portfolio. If all of this nonsense was removed from the market, financial advisors would not have a problem. Canadian homeowners would be able to make other decisions that they're not able to make right now because the structure of the market doesn't allow it. Capital gains on the family home, if treated like anything else where you're taxed capital gains, would be to the benefit of homeowners, and it would build more wealth inequality in this country on the day that those rules were instituted. Now, if they want to set a brand new set of rules, how you change capital gains, and they're going to financially penalize you for being an owner, that's a different story.
Ross, thank you so much for chatting with us.
Thanks for having me on, Jim.
My guest has been Ross Kay, home ownership consultant at thewealthyhomeowner.ca. If you have any questions for Ross, and he loves to answer them, you can send them to info@housestreet.com. Find us on Twitter @HouseStreet. Our YouTube channel is Talk Digital Network. You can also find us on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.